Good afternoon, everyone, and welcome to Stock Market Today. It's Coram, and we've got a look at the action in today's session, Friday, January 31st. Yeah, that's right. That's what today is. What a week it's been. Days are kind of blurring together. What a roller coaster week. My colleague, Mike Webster, is here to explain it all. Mike, you got some splaining to do.
Well, first, I'm just happy that you're feeling better. We all felt for you. It's never fun
Thank
being
you.
sick, and you
Much
were a
better.
trooper trying to do as much as you could. Look, this was a crazy freaking week. We have so much to talk about, but it was an exciting week, frankly, and we got a lot of info. And we closed terribly. So I would wish we would have done the show at the open instead of at the close, but it is what it is. So we'll get into it and let you know what to expect for
Yeah.
next week.
Exactly. More twists and turns. That's what to expect, right?
A long and
Expect the
winding
unexpected.
road. Yep.
Yeah, it seems like that's going to be the theme for 2025. Expect the unexpected. So we'll get your thoughts on that and how traders should approach and digest new information as we get it. So a lot to get to, as Webby said, market, stocks, and more. So let's start with a look at the major indexes in terms of Friday's action. Downside reversals here across the board for the major indexes. The NASDAQ down 0.3% by the end of the day, the least hard hit here. The S&P 500 down 0.5%, reversing lower after intraday, getting very close to those recent highs. The Dow was down about 0.75%, and the Russell 2000 down 0.8%. You want to start with the NASDAQ or SPY?
Let's start with SPY because
Okay.
SPY is really the leading index
Yeah.
at this point. The low is still above the 21-day terrible close. Look, the elephant in the room is, President Trump came out in midday. And then why don't we go to the interday
Sure.
with news about the tariffs for China, Mexico, and Canada. And so, of course, that's just the way we're not a political show. The reality is, he's going to do a lot of these things. And we just have to deal with it from
Yeah.
a market term. After
Right.
hours, you can think of it, you can either be raw pro politics or anti whatever. It doesn't matter. But this show is
Mhm.
about the stocks and
Yeah.
how you react to it. So as
And I
you
would say, just to quickly jump in here, I mean, it's just like, hey, when we get Fed news, I mean, there are things that hit the market that we as traders, we have to react to, right?
Yeah, you have to react. Now, the issue is, you can see when the news came and then the selling initially starts. My interpretation is you've got text reading algos out there that see the headlines and they react quicker than any human could. It just they see tariff,
Mm,
they sell, they see
mm,
something else, they buy.
mm,
And with Fed statements and and you see this all the time. It happens so quickly that there's no way that a person could process it. Then after that initial reaction, lots of times it's just a little shakeout and then it goes back to where it was. Now, this one is kind of tricky because it was going into a weekend and tariffs are a big deal, and everyone is, well, might as well go back to the daily.
Yeah.
The the Fed right now is obsessed kind of with tariffs and with the impact that that could have. They're ignoring any of the positive things that could happen with reducing the deficits or Doge or any any of the efficiency improvements, and they're focused on this. That's just the reality. So that means the market is fixated on the tariff aspect of it. So if the tariffs get cut, we rip. If the tariffs keep increasing, we probably have more of this until the market can kind of price it in. And that's what happens is no matter how good or bad the news is, it takes a little bit of time for the market to digest it. And I was just talking to you a little bit
Mhm.
before the show about what happened after 9/11. A terrible thing. I'm not equating the two, but after 9/11, anytime that there was some news event in there with any possible terrorist thing going on, the market would just sell off intraday immediately. Any thought of a potential, another terrorist event, and then eventually, and it took a while, took a year or so,
Mm.
And then the moves got smaller and smaller, and I think people, the people who day trade the S&Ps and the Nasdaq futures, as well as the algos, just started realizing, okay, there wasn't, money to be made there anymore, and the market was able to realize, okay, this is what we're in. We're in a war on terror. These things are going, certain things are going to happen, and it's not going to be like the 9/11 type of impact. And I think it's going to be the same thing, whether it's Fed related, uh, any administration, whether it's President Trump or anyone else. At first, the market just has to get used to it, and then these moves will get smaller and smaller. Don't know how long that's going to
Yeah.
take. I'm guessing probably 6 months or so. So I think we should expect
Mm.
these quick moves. So how does that help you in the market? What I think you should do, what I'm going to be doing is, for the most part, dialing my position sizes back,
Yeah.
spreading out more with groups. And of course, we're going to talk about AI Monday and all the mess there. But so you've got some in restaurants, you've got some in AI, you've got some in non-AI tech, you've got some in retail, in
Mm.
real estate, everything. That way, if one sector is getting hit really hard, like we saw on Monday with the AI, you've got some other things that might be going down, but not at the same pace. It'll be easier to deal with this type of market.
Yeah.
On top of that, you can just, not be have as high of exposure until things kind of settle down.
Yeah. And, obviously we're in a different macro environment, different interest rate environment. But in, the 2016, or I guess 2017 to 2020 timeframe, I mean, there was a lot of tariff talk in
Mhm.
Trump's first term as well. But yeah, we're just reacting in real time to the market's reaction. And as you
Yeah.
said, the Fed really keying off of this with a wait and see type of approach focused on the tariff aspect.
Yeah, and I think if anyone goes back to the December 18th, and you can mark that it's
Yeah.
obvious on the chart, the really bad day on there, when Powell
Mhm.
had his last conference besides this week, a press conference, and talked about the tariffs, it let everyone know that that's what was, in a nutshell. Hey, he doesn't know what the tariffs are going to be, what how big they're going to be, for how long, and so they're going to do kind of a wait and see approach, like you said.
Mhm.
And so they've paused, and the market likes rate cuts, but they're not going to get them anytime soon. And I think the market is just has to
Yeah.
come to grips with
Mhm.
that. And the more the tariff news ramps up, the more the sell off, because the longer it is until the Fed knows what to do. There's no way the Fed's going to do anything while we're still getting these announcements.
Mhm.
Once they get a handle on it, they're probably still going to be late, but it's going to
Yeah.
be sooner rather than later at that point. So that's the reality of what we're dealing with. So now let's look at the charts. The Nasdaq is still above the 50-day, but it found serious resistance at 20,000, and at the top of this trading range. And with a downside reversal going into the weekend, the reality is, after we've kind of wedged up this week, your expectation should be lower on Monday. I hate that, because I'm long. I don't have any shorts on. I don't have any inverse ETFs or anything like that. But that's the reality of what you would expect. Now, we don't know what the news is going to be over the
Mhm.
weekend, or how this news is going to be digested over the weekend. We could just
Yeah.
resume back up. But the reality is, with a downside reversal at a key level,
Mhm.
you've got to expect further weakness. And one stock I think we should talk about right now is Apple
Yeah.
for a second, because this is one of the biggest market cap stocks out there. It started off the day so strong, and then reversing like that. That's not what you would like to
Mhm.
see. Now that the earnings are behind us with this stock, and getting a sell off like that in such a major. This isn't some thin little hot stock that a bunch of hot hedge funds are in. This is, everyone's in it. It's a big quality company. Selling off like that is telling you the big institutions were selling into that strength and reducing their exposure. Now, the other side to that is, most institutions stay fully invested, so that money is flowing somewhere else. So you
Right.
just have to find that. And that's why
Mhm.
you search over the weekend and,
Right.
screen to see where the money was flowing. But that was not what you'd like to see.
Yeah, exactly. And some of the megas look good.
Yeah,
We'll
they
be
do.
taking a look at a couple of them, but like you said, I love that very tangible, actionable thoughts there about how to handle this whippy market. Obviously, we got to stay nimble, but to counter that with position size, with thoughtful diversification, I think that's really helpful. And even just portfolio exposure, overall exposure. I think those are all really helpful tools and reminders for our audience. All right, any other high level index thoughts, Webby, or
Well,
should we
should we talk
move on
about
to
Monday
the
now or later?
Monday now or later? We can talk about it
Monday,
now.
Monday's AI, yeah. So why don't we
Oh,
pull
yeah.
up any of the AI stocks that come to mind?
Well, we know one that's on a lot of folks' minds.
Okay, NVIDIA. So look, we had if you were on vacation this week and didn't see any news, why don't you tell them what happened?
Well, I think Friday and over the weekend, uh, there was really additional momentum behind this news out of China with an AI platform called DeepSeek, which my understanding has a lot of copycat esque similarities to OpenAI's ChatGPT. The news here is that they were able to create the same level or a comparable level of functionality and performance in a much cheaper way. Obviously, that is the claim, and it was a lot for investors to digest. I was hoping that they digested it a little bit faster than they did, but it's still being digested, and it's okay. Well, how much did they actually spend? Can we trust this data? How much of a threat is it or not? Is it impacting on the demand side for hardware and energy and data centers and more beneficial to the software side? Or you have this Javon's paradox, which means, hey, even if it's cheaper, the demand is so great that it's not going to really matter in the end if it's cheaper. And who are the winners and losers to come out of this? So I think there are still a lot of questions out there. But anyway, big news essentially with a purported threat out of China on the US dominance in AI. So a lot for investors to grapple with. And there was a lot of panic selling on Monday. And maybe there does need to be a reframing of some of the valuations here. But like you always say, Webby, you just have to react to what you're seeing on the chart, not just, oh, what you think. Oh, well, NVIDIA is the leader and they'll come out of this no matter what.
Yeah, I agree with everything you said. Just one thing I would clarify or just comment on is not necessarily panic selling. Like there was heavy selling and it's looked at as panic selling because they bounced. But, if you go back to 1987, you go back to, 1929, if someone sold initially, in fact, let's go to the Dow in 1987 in October because I hate when things bounce so quickly and people, get into the mentality of it's always going to bounce back because they don't always bounce back right away. And so people should study. I'm not calling for 87 crash or anything like that because you don't call for those things because they've happened twice, 1929, 1987. So most of the time when things look bad, you just work your way out of it. But Bill was in cash Bill O'Neill, the founder of IBD, was in cash during this time because he was just following what the market was doing. And if you trace out and go back like 2 weeks, like right when it was breaking the 200-day and do a change date there, or even, before that, your blue day up, yeah, there. Okay. So yeah, go forward to the blue day. So people would say, oh, wow, maybe it was overdone, that's selling, you undercut a low, you're bouncing, everything is fine. And it could have been. 1987 was actually a really good year until this point. It was actually a great year until that point.
Mhm.
Now play forward and just do one day at a time, because this is important. When you see that, a lot of people are like, oh, everything is on sale. I want to buy it now. It's close to the 200. Let me buy this weakness. Now go forward one more day. Now it's, oh, wow, it's really scary. Now we're through the 200. Everything's on sale. Looks like a potential double bottom. I'm going to get in now. Now let's go forward one more. Wow, now that's a Friday, Black Friday. And, looks really, really bad. I've got to buy some cheap. Then let's go forward. Bad, right? So you don't want to get in. This doesn't happen, very often. You can go back to 1929. Well, we don't have it in right now, but
And even
19
COVID. I mean, that was
yeah,
a
let's go to
very
COVID.
sharp,
Let's
furious
let's
sell-off.
jump to COVID, February of 2020. Go out to the end of it, maybe like February 24th or something. Yeah, so you break. I can't remember people's names that I've known for like 20 years, but I can remember dates and stocks and stuff. It's crazy. So this breaks wide open, and people would think, okay, I'm going to buy it on the cheap. Now, why don't you just play through it quickly, day by day, to get that impression?
And there were
Really,
some big up days in here too. Like, look at that.
yeah,
There
that
was
was
a couple of head fakes in here.
yeah, and that's why you want to wait until things settle down
Yep.
to and have
Yeah.
something to trade off of, because on those big up days you're thinking like, yeah, I want to buy the bottom, and it's an ego thing. People
Mhm.
want to get the bottom and say that they've got the bottom, but if you actually got the bottom, you probably got 15 other times where it wasn't the
Yeah.
bottom.
And
So
some stocks looked like this week,
that's exactly, and why I wanted to do a cautionary tale. Let's go to what was it, GEV,
Yeah.
this week, because that was one that we were trading. We sold it on Swing Trader last Friday before the gap. We bought it out of the base, and it sold it into strength, and exited it on Friday, and I exited mine as well on Friday. And then you have this big gap down on news. I didn't remove it from Swing Trader because I saw that coming. It was just some rules that I follow, taking out the lows of the prior day from a swing trading thing, and it looked like it needed a pause. Now, people in there that had missed the run were thinking it's on sale on Monday. Yes, it's bounced up, but let's do a 50% retracement from our highs to our low and see where that's at.
Mhm.
I should have
So
done the math ahead of time.
well, we'll try to do some mental math. So the
Yeah.
high here, basically 450, low 320. So 320, 450, and now at
Like
the
385, let's call it.
okay. So it closed at 372. So
Okay.
below the 50%.
Yeah. So if I were in it, if I had held into it, and you like was a deer in the headlights and didn't know what to do on Monday or Tuesday, I would have been selling it today, because you're getting close up to that 50% retracement level where you're in no man's land now, because it should base out. It should either roll over and go down if the news really is bad, which we don't know yet. There's no way to know, because the news is coming out of China and we're not really sure. But when something bounces like this, the initial bounce, that people call it like a dead cat bounce. I hate that term, but this is kind of what that is you get that, no matter how bad you fall, you bounce up, and you can't know that it's right until you go more than 50% and hold. Like let's pull up Oklo, for example, which is a hot stock. And this one more than retraced it. But again, if I was in this, I would have been selling it into this, because this is not how charts normally act. When you have this type of gyrations, they need to settle down. Now, sure, this thing could just keep going up and never look back. And let's go to another one like VRT. In
Yeah.
this
And I
same
guess when
sort
I
of,
say panic selling, I mean, when you all of a sudden get 20% haircuts in some of these high quality growth stocks that, the average true range is not nearly what that sell-off was, and a close at the lows, and the volume behind it. I mean, that's definitely
Yeah,
intense
no,
selling.
you're right. It wasn't, you didn't say anything wrong. I was just, I know I've just
Adding
seen
more
a lot of
color.
comments. Yeah, I was, saw a lot of comments this week where people like, "Oh, you shouldn't have sold on Monday." Like, I wasn't
Mhm.
in this space on Monday, so besides like
I
the
sold.
views, but if I
Sold.
had, I would have sold. Like, and I would have just freaking gotten out of it, because when they break like that, if Bill
Mhm.
were here, he would not be buying any of these things, that are moving up, because he would be looking more like this one of the ones that we looked at is the weakest, because you do the 50% retracement. So this is the little tool you can do over the weekend is look at all your favorite stocks that were in this space,
Mhm.
look at the recent highs and this week's low, and mark the 50% retracement on there. You'll know that to start getting back into them if if and
Yeah.
when they start forming some sort of structure, a tight
Right.
structure
Right.
above the 50. Don't just, okay, it's 50% up there now, I'm going to get back in.
Yeah.
Wait for them to tighten up, unless it's Vegas money. Like if it's a small account that you've got with the, small positions, you just want to,
Mhm.
gamble, that's one thing. But if it's like your real account, um, like you
Yeah.
don't, you're taking on way too much risk. Nvidia's in a weak position right now. It needs time, or positive news, and the
Mhm.
news could get better or it could get worse. Good news, gaps up. Bad news, we take out this week's lows. If it takes out this week's low underneath the 200-day with a major stock like this,
Yeah.
um, that's not good for the space. Let's go to the weekly on Nvidia. I know we're going long on this. I'll go fast through my charts
It's
because
a
this
key
is quick.
week.
Yeah.
It's a key week. Big week.
So this, thank you for giving me a pass on this. The RS line moving averages on there, if you could point to them, that's a big, something I came up with and a big part of what I do. If you're holding a big position, when it, in a nutshell, when you're underneath that blue line, you've got to exit. Um, and if you're following my particular rules on it, and I've got videos on it on, out there, that then you exit and you don't get back in until that RS line goes back above those moving averages and it sets up. Not just the RS lines
Right.
back above there, it gives you an entry.
Right.
So if I were in this one, for the last year, I would be exiting it. Now let's go to the monthly because
Mhm.
there is a caveat here. If you've got a super low cost basis, let's say under $10, and you've sat through, that big base, you came out alive, I would wait until that RS line goes through your blue line there. But even on a monthly, it crossed. So I've got rules around this. Is called the quick, quicksand, and Grateful Dead. The quick is this, what it's hitting, where the green line is hitting your shorter term one, your orange line, you sell part of your core position. If that RS line goes lower, eh, the next bar, so this is a monthly bar, so the next, during next
Month.
month, if
Mhm.
that goes lower than this point, you sell more. If it goes through that blue line, that's your Grateful Dead signal, and you're grateful to get out alive. That's the
Mhm.
play on words there. So that's where you exit it. So if you got a really low cost basis stock, that's what you could do. But I'd just be out of it. And I
Yeah.
love Nvidia. I love what Jensen's doing. He's a genius, and he's come up with these chips, and he's got this great vision. But the chart is the chart, and if
Yep.
Bill were here, he'd be out of this. I just
Yep.
know
I got
it.
out.
Good for you.
Pained me to do it. It was my big winner in 2024. But yep, you gotta rip off the Band-Aid when you when you get the sell signals. And
Yep.
I think someone had made the argument where, oh, well, sometimes these big liquid leading stocks, when they touch the 200-day or the 40 week, that can be a support level. But I would argue, and I know we're spending a lot of time on this, it doesn't have to be. Look at Eli Lilly. It
Mhm.
it broke the 40 week and it hasn't gotten back above it. So I wouldn't count on that necessarily to be your guardrail. Maybe it's roughly the guardrail, but not necessarily. And it did close below that level this week instead of finding support there.
Great points. More importantly than the 200-day or the 40-week line, the black line, in my opinion, is the RS line with their moving averages, because by definition, that is telling you whether it's a leading stock or not. The RS is how it's doing versus the S&P, your bogey. So if it's going down, it's
Mhm.
lagging. This is not a leading stock. I don't care what anyone says. On a weekly, on a daily, it's not a leading stock because that RS line is pointing straight down. Now, it doesn't matter what it is doing around the 200-day. If that RS line was back up near new highs, is by definition a leading stock.
Mm.
So that's another thing you can do over the weekend, is look for ones that have been leading. And frankly, that I know we all love NVIDIA, but that RS line has been pretty much
Yeah.
flat for a long time.
Oh,
It
yeah.
hasn't really gone anywhere.
Absolutely.
So
Yep.
you
There was
don't
there was
want
a time that this really added that, juice to the portfolio and hasn't been lately.
Yeah, and hopefully it is. Look, I want to get back in it. I really do, but I'm gonna just wait for the setup, wait
Yeah.
for that RS to get back above it. And I know
Mhm.
we went long on this, but I do think it's very
It's
important. And
important.
we do talk about this type of stuff on where every day.
IBD Live in the show, but yeah, IBD Live. I love it. It's a great community. You had such great insight on the show. Not only do we talk about trade ideas, market conditions, portfolio management strategies, just really great tools for the trading toolbox. So if you want to become a better trader, that's the place to be. So I think a worthwhile discussion here, no doubt. So
So do you want
good stuff.
to go just burn through the ETFs real
Yeah,
fast, or
let's do that super quick.
I'll let you do the talking.
Okay, we want to start by what was down the most.
Yep.
Okay. All right. So we have the IBIT ETF. Full disclosure, I do own this. This is a measure for risk on versus risk off in the market. Can be off the most today, but if you look at that RS line, still intact, I would say, but not leading right now. Next on our list is energy, taking a big hit today from a price percentage standpoint. Friday, that is down 2.8%. The relative strength line has been deteriorating for a couple of weeks here. ARKK, this is another proxy for growth. Downside reversal off highs today, but look at that relative strength line. It is in a very strong position. XLP, consumer staples, uh, got a boost on Monday, which no surprise with fear coming into the market. This sort of a safe haven flight to safety, risk off kind of move, but not something that we're really focused on right now. Perhaps there are some names in this sector worth screening, but if they're quality enough and they're setting up, they'll come through the screening parameters. Here's a look at biotechs. The relative strength has been improving, but I would say that it needs more improvement. And then RSP, we didn't really talk about it in our market section. You have any comments here, Webby, on RSP?
Yeah, I do have a position in this, and we did put it on Swing Trader because it was setting up, perfectly. I like this is how I like to look at breadth in the market, and its low has been above the 21-day for a long time now, which is an important part of how I look at things. The RS line has been trending up in general because of just the mechanics of it. It's going to lag. Let's go to the monthly for 1 second on here. Given enough time, it's going to lag. So it's something you don't use very often to actually trade. But even though it's sold off and closed at the lows, on a relative basis, I still think it looks fine, and it has a low ATR. So
Mm.
anyone who's risk averse or maybe has become risk averse after this week, which you can't blame them, if you're looking for exposure without a lot of downside, this is one I'd look at.
Okay, here's the materials. This is an area where the relative strength has been improving over the last couple of weeks and basically performing in line with the market this week, roughly. XLI, the industrial sector, we're thinking here a little bit on this. Perhaps there are some stocks in this area setting up. Another area that since
That's the best
January,
looking one so far, right?
yeah, definitely. Relative strength improving since the beginning of the year. pulling back a little this week, but still setting up here. So an area to screen. Chips definitely got thrashed this week, which is so crazy. 1 week after things were starting to look promising,
I know,
with
right?
the relative strength at the highest it had been in a number of months here, then we get whacked. So definitely chips, in general, a bit of a sore spot right now, though there was an attempted recovery throughout the week, but still looks like from the high to low, below or right around at least that 50% retracement level. Technology, another area that got hit this week, that for months has been just performing in line with the S&P, now starting to deteriorate a little bit there. As you mentioned, hey, let's look for some diversification outside of technology, even though there are still technology leaders. Utilities, this is that sort of AI adjacent area. And so no surprise with Monday's damage, this RS line hitting its lowest levels in a number of weeks there.
Probably worth looking at UTES as well, which
Oh
was
yeah, that's right.
the utilities is more focused on that space, and we did have it on Swing Trader, and we had removed. I think we removed it last week, and it was looking great. It was just weird as locking our profit in and moving on to some other things. Did not foresee that, but this would be, one that if you want to look at that space for potential ideas for the future for a month or two from now, I would look through those holdings, and that's where you're going to see the VRTs of the world.
Mhm. Okay, here's financials, which of course always kick off earnings season, and it looks like we're seeing this area hold up really well.
That's the
Uh,
best looking one now. Yeah.
yeah, in light of the volatility this week, holding strong near highs. And then XLY, this is consumer discretionary. You've got Tesla and Amazon in here, a downside reversal on Friday, but I would say there is a general tilt higher in that RS line in recent weeks. So I think this is an area to look as well. And we
I
know some of
agree.
the leaders in the group.
Yeah, and I do have
Um,
a position in Tesla, and I think I have a small one in Amazon. So
I have a position in Tesla as well. Here's healthcare. Perhaps a little bit surprising to see this coming back in recent weeks. I still think more progress needs to be made, but we do have, medical healthcare related headlines here tied to the political sphere. So that's something to be thinking about. But again, an area underneath the hood. Hey, maybe there is some select leadership there. Here's real estate, still a laggard. RS line basically flat, but has been lagging since last fall. And then software held up pretty well this week, I would say overall. Maybe not quite as much by the end of the week as it was looking like on Tuesday.
it
Uh,
looked great on Tuesday,
it
but
looked great
yeah,
on Tuesday.
as the week went on, they started falling
Yeah.
one by one. But
Yeah. I mean, you
yeah,
had
so
ServiceNow. That was a pretty big hit to
really
software.
was. The
And
ServiceNow
then
is one of the
Microsoft.
quality ones out there, and yeah,
Mhm.
but that's earnings for you. It's a crapshoot.
Mhm. And then here's XLC. This looks like this gets the crown for the strongest from a relative strength and price performance perspective. You've got Google and Meta in here, and we're going to be taking a look at Google, Meta, also, a string of up days in a row here, Webby, after a
Yeah,
breakout.
and I do have a position in Google as well, but earnings are right around the corner.
Okay. So speaking of, let's take a look.
Yeah,
I think it's a great segue. Let's take a look at Google parent Alphabet above 200. That was that round number Livermore type level that you could look at there, Webby, but was able to shake off Monday's weakness very quickly here, down 4.2% on Monday, closed at the lows. But the positioning, I mean, it was a close below the 21 day. It wasn't a 20% plus decline with a sharp break below the 50-day, headed down to the 200-day for a lot of stocks that we saw. And now potentially blue skies here. But like you said, we have earnings next week to contend with. And I'm sure they're going to be talking about this whole DeepSeek thing and AI spending on the call.
yeah. Even though it's not one of the stocks that we were going to talk about, let's just pull up ServiceNow, and then we'll toggle back to
Okay.
Google, because the point of Google looks great right now, and this looked great. And then the earnings happen, and you just don't know what's going to happen. So this could
Very
happen
true.
to Google.
Very
But
true.
now let's go back to Google. This, if you didn't have earnings in a week, man, I would just be loaded up to my eyeballs in it because of that relative strength line.
Mhm.
And think of the dynamics. You're a big mutual fund manager, and you've got 100 billion plus to work with. Now you're reducing your Nvidia, you're reducing your
Mhm.
Broadcom, you're reducing, all that space, the AI related space, and but you still want that bounce back, and if the market comes right back, and you can't go to cash if you're a big mutual fund, so it has to go somewhere, and they don't want to all go into the Johnson and Johnsons and
Mhm.
the Coca-Colas of the world. They
Right.
want the liquidity, and they want the big mega cap ones. So
Yep.
it's flowing here and it's flowing in Meta as well. And we saw earlier that it was flowing out of Apple today. They were
Mhm.
just locking that in and moving over. So this is what you want to pay attention to. If you don't look at anything else on the chart, just look at that RS line. It's going up, that's where money's flowing. Going down, not so much.
Mhm. And on top of that, some of the Mag 7, I would say, have a higher average true range, right?
Mhm.
The average true range here for Google is 2.5%.
That is
So,
great.
yeah.
Yeah, that's ideal. Like a 2.5% is very, very low. It's also part of like what it's been doing. It's been base billing, so
Yep.
that our ATR is over 21 days.
Right.
So, you know, come next week when it reports, that
Sure.
will change temporarily because of the earnings report will typically have a big move up or down. But yeah, this is an excellent point. And you always want to look at that ATR because
Mhm.
this versus like an OCLO that we looked at
Right.
earlier, that was probably like a 15 ATR, meaning 15% up and
Mhm.
down in any given day.
Mhm.
2% I can handle.
Right. Especially to your point, it's towards the start of the show in this type of environment. What are sort of some of those risk management levers you can adjust? Right. It's position size, it's diversification. Also, I know at times you've talked about going towards more of the quote unquote slow and pokey type names, right?
Mhm.
I wouldn't say Google's quite as slow and pokey, but it's a steady, so maybe
Yeah,
strong and steady kind of name in this market here.
yeah, relative to the other heat, yes.
Yeah.
Famous last words until
Yeah, let's
everyone's like,
see what happens
"No, I'm
next
talking."
week.
I'm like, "Okay, down
Yeah.
20%."
Right.
Just
So, with earnings next week, and we did have our weekly installment of earnings cheat sheet with our very own Ed Carson and Alexis Garcia that dropped this morning on our
awesome.
YouTube channel, as well as investors.com/videos. I'm sure they talked about Google, how, what to look for in the report, how to handle it as a trader. We like having that profit cushion, but there's tons of strategies, whether it's hedging, waiting till the results come out, so many different things, levels to look for depending on how aggressive or conservative you are, all that sort of stuff. Check out earnings cheat sheet, and we will also be covering this, no doubt, all week long next week on IBD Live.
Yeah.
Okay, let's take a look at another tech stock. Webby, when you sent me your ticker ideas for today's show, I was thinking, man, great minds think alike,
Yeah.
because when I was going through my screens, I went through the IBD Live watch list, and I just was sorted by what's moving, but was just also looking for, hey, what are the stocks that have held up this week? And Google was a standout to me, and the other standout to me was Netflix. I really like this tight action here after that earnings move. So
So
great minds think alike.
yes, they do. So that's the only way I have a great mind if we if I think like you. So
Oh
yeah,
no.
I do have a position in this. We did try it a couple times on Swing Trader, but we were trying to reduce our risk and backed out of it. It wasn't doing anything wrong. It was just it was a risk thing. That
Mhm.
there's that element of it. But what I love about this
Yeah.
is the earnings are behind us. We don't
Mhm.
have that earnings risk. So you don't have this thing hanging over your head for maybe 12 weeks or 11
Right.
weeks from now. and it's sitting right underneath that Livermore number of 1,000. So if it can get through there, it could really launch. So if over the weekend the whole tariff thing dies down, and maybe Canada or Mexico or both come back and they said, hey, we're going to do this, can you please, you know, pause the tariffs, that stuff can happen. I mean, that's what President Trump is doing. He's negotiating. And if that happens and we get a lift, this thing should lift through, 1,000 and then be on a run. But if the news goes the other way, they'll get everything.
Mhm.
But yeah, this is great action, and that RS line is just
Yeah.
hanging in tight because it's not going down when the market is.
Yeah, and you've got huge earnings acceleration. Really love the triple digit growth that they reported in the most recent quarter. I think it's, showing up in the story as well that they have going on with how they are, the ad supported version, games on there, live streaming content, all that good stuff. And then you're also seeing a little bit of a pickup on the revenue side as well. And not to mention, this is a liquid large cap tech stock that doesn't have AI exposure, right? So I think that, I love the tech sector. So, this a potential way to play tech without having that direct AI risk.
Exactly. Now, every company under the sun is going to say they've got AI with them, whether they're making
Yeah.
paper,
Well, it's not
they're
trading like it.
right,
They
yeah,
have algorithms,
yeah.
recommendations and all that, but it's not trading in the way that a lot of these other tech stocks and energy stocks, utility, whatever, are with that AI exposure.
The easiest way to tell if a stock is
Mhm.
truly an AI stock or not, look and see what happened on Monday.
Right.
If it fell a bunch on Monday, it's looked at as an AI stock. If it didn't, it's not.
Yeah.
Simple as is that. And the other thing is, I love putting my Peter Lynch hat on, and I, you know, I will be dead before you can take away my Netflix, um, thing. I've had it since 1998 when they had DVDs. I've never gotten rid of that, and I've never gotten rid of my Costco membership either. You know, and it's things that, and I don't think I'm alone. And so they have that install base. That how that translates is stability of earnings and sales because it's more predictable, and then the analysts can plug that into their little spreadsheets and say, okay, there's probably not going to be that much churn. There's churn around the edge because people try
Mhm.
this for a month, try the other thing for a month, and then go back. But then there's old fogies like me who are just like, I'm not getting rid of my Netflix.
Yeah.
Period.
Night Agent season 2 recently dropped. I've been
Already
sick,
started.
so I finished it last
You
night.
finished it? I'm on
Yeah.
episode 8. Yeah.
All right, you're close.
Yep. I'm getting there.
You're close. Ends on a cliffhanger like, all good shows. All
Oh.
right. Let's move on. The last stock, we'll just quickly take a look at this one. Cava. Again, hey, diversification. This is in the retail restaurant area. Definitely made a comeback this week, a notable move above the 50-day line on Wednesday. So it's trying to make a comeback after, an ugly November, December.
Yeah. So I'm back in it. We put it on originally on the swing trader the first time back in August when it poked through its 50-day. And then
Mhm.
I was trying to hold on to it, and it just didn't work out, frankly. And then we had to get out of it that the day that it broke the 10-week line or the 50-day. We got out of it before it broke through the 50, but still I was very disappointed because I was looking at this, and still am looking at it as the non AI leading stock. But it has to prove itself. That's just my opinion, and it's not proving itself yet. But I do think this has the potential to be like what CMG was, and people should study that massive move that it had. So this is rounding out its cup. It's not in a traditional buy point yet. It won't be until it's closer to 150. Let's look at the weekly because there's a clue in there that is
Mm.
very important. And it's at 3 weeks tight near the bottom. That's something that Bill came up with before both of us were born. And, I studied it with him in great detail. And it's very important. And the concept is you get 3 or more weeks in a row that are almost unchanged. And that's a sign of accumulation. Now, the two of us did work where it was even 2 weeks was relevant. But what we programmed in here is shows up in blue shade. It's kind of hard to see on here, but that is a tight area, and it's a sign of accumulation. And it did that right where you'd want to, right by the 40-week line. Had a final shakeout, cleaned everyone out,
Mhm.
and now it's poked back through your 10-week line. What I don't like is the 10-week line is going straight down. That's not a
Yeah.
good thing. The other part is that bad break that we had through the 10-week line originally,
Mhm.
and the stalling at major stalling at the top. So by no means is this picture perfect, but
Mhm.
it's in the process of building its right side. You've got what, 1, 2, 3, 4, 5 weeks up in a row, which is also another thing that we see in a lot of our bases that end up working out. So it's to get this, we wanted to bring this up to get it on your radar now. I don't think most people should be buying it yet, but just
Yeah.
have this ready. And one of these days, I will like their food.
Yeah, I stayed away because of the declining 10-week that you mentioned,
Mhm.
but I'm sure there are plenty of examples of an aggressive entry with this type of setup working. I mean, I know there are. So,
Yeah, but it is a big negative. If it wasn't Cava, and Bill would do the same thing where he would make kind of exceptions if he really understood or really
mm,
liked the fundamentals of a stock, and say, okay, this isn't textbook. It's not good. A declining 50-day or a sharply declining 50-day or 10-week line is a real negative, and that's normally where people would short. But I'm looking at this differently and making that exception.
mhm,
Obviously, if it backs down to the 50-day, I'll be back out of it.
mhm. All right. Well, earnings in about a month. We'll have to see if we can get more information on how the company is doing at
Do you
that
want me
time.
to share my things and
Yes,
I'll try to burn
please.
through them quickly?
Yeah, let's do it.
Let's see. Let's see. Hold on. Don't screw this up, Mike. Am I talking out loud? Let me see. Where in the world did my trade station go? There it is. Okay. Sorry, this always.
Use.
Oh,
I'm
that's
seeing
not. Wait, no, that's not trade station. Hold on. I'm. I'm.
it's
I'm not
okay. We'll
sure.
get to that one
I'm gonna
soon.
close some other things because so many things pop up on here. Just one sec. Okay. You can sing a song while I do this.
Oh yeah, my vocal cords are feeling great after, the flu and the sinus infection. I'm sure everyone wants to hear that. All right,
Okay.
here we go. Back
Okay.
on track.
We're taking a step back, doing the Bob Weir thing, looking at the weekly. Here's SPY. The candle itself is blue, which is good, meaning that we opened up weak and closed strong. But if it's, I can try to blow this up a little bit, and you can see that candle there, that peak is way up there, the little wick, as they call it, way up there. So that's a negative sign, but at least, it's a positive body. Let's look at the weekly of the NASDAQ, and same type of thing. And we're just looking at this for just general clues. And frankly, it doesn't look as bad on the weekly because of that big positive body. Now let's go over to our regression lines. And again, we're our regression line died on the NASDAQ back here on January 13th because we were too far out of these lines. And we don't have enough time yet for this one or for SPY to use them. And this one died right, over here on December 18th. So we need at least, 25, 30 days from January 13th trading days before we start using those so we can move forward. This is the important part. This is the 50% retracement. Lots of ways to measure this. For these, we're going to just look at the high over here in this early December, the low here on January 13th, and we're still in the upper part of that with the SPY, which is good. And let's look at the NASDAQ, not so good there. We're still above it, but just barely above the midpoint there. We don't like seeing that. We would have rather closed more up here, really where we opened, but you can't always get what you want. And here's the RSP. This one goes back to the November high because it had a much bigger sell off, but it's still living above the our 50% retracement. I think I put a couple of these in. We kind of already talked about it, but like the NVIDIA, for individual stocks, I would do the recent highs with this week's low. And again, wait for it to, in this case, trade above 132.61 before you would, and not just trade above it, start living above it. Did I do Avago? So Avago or Broadcom was, using the high from the 24th and the low from the 27th, and it poked above it earlier today, but you want it to be up in this area and tightening up, as we talked about earlier. Let's look at the levels real quick. I tried to streamline this and make it a little bit cleaner. So let's just blow this up. The green line, we want new highs. That's pretty obvious. This one, the 600.17 is a line in the sand that I'm using back from the November 11th high, but it also goes through a lot of key levels, and it's that round number that everyone's going to be looking at, 6,000 on the S&P 500. The next important level to look at would be right here, the low from the 27th, and that lines up with a lot of other areas. The equator line that I'm using is the low before our follow through that we didn't need. We had a follow through on the 17th of January. And so the day before that, because we had the gap, I'm using that level there as my equator line. So that's 590.93. So if we go through that, get very, very defensive. And let's do that on the NASDAQ as well. And here, today's high becomes an important, because we ran into such clear resistance, and it's right around the 20,000 level, 19,969. We want to get above that and stay above that. On the downside, again, we're looking at, this area, the 19,335, which coincides with a lot of different areas. And then we've got the 19,204. If we go through that, that becomes, a real problem. And certainly the low on January 13th, then who knows how much lower we go, probably a trip down to the 200-day. We always round these out, just looking at the very basic 21-day, keeping it simple. Well, with that take, our low is still above the 21-day on SPY. So that is a good thing. And then RSP, same thing there. That's looking really good. And the NASDAQ, not as good. Comp. So this one is trading through it. And you can see how the difference, if you just focus your eyes on this versus RSP, how different it looks. And another way of doing that is our handy dandy Webby RSI, which I'm going to show in a second. And get ready.
And I feel like it also emphasizes the point about diversification, looking outside of tech. There are tech leaders still, clearly. We talked about some of them, but looking elsewhere too for that strength.
Great point. So here's the SPY, and this is the Webby RSI down here. The blue histogram at the bottom is expressed in ATRs, and it's telling you that our low is still above the 21-day, but it's just barely above it. And
not a lot.
Yeah, it's still in the weak area. We really want it to get, in the 0.5 or higher, and really in the 0.5 to 2 ATRs is kind of your sweet area. And obviously on the NASDAQ, there's no histogram there because our low is not above it. But on RSP, this is why I do have a position in this one, because this is the best it's looked in a while, where it's been still above that. Now let's toggle over, trying to go quickly to our Bob Marley, and this is our off high measurement in ATRs. So we're still in the green area there. We're just 1.5, let's say, ATRs off of our high. So that's not too bad. Let's do the Qs. The Qs are only 2 ATRs off our high. That's not too bad either. But the RSP, even though it's much better on all the other aspects of it, this is the weakest because it did sell off really hard over here. And we're just barely hanging on in the green area. just a little bit above
Mhm.
the 4 ATRs. And I think that's the
Yeah.
quickest I've ever done that.
Good job. Yeah, and of course, I have a follow-up comment on
Sure.
the SPY 21-day ATR chart that just reminded me, I think that's also what made Monday so tough because the market was in such a strong position
Yeah.
heading into that week, right? So, I think that added to sort of the jolt the jolty feeling that I had
Well, why
when
don't you,
Monday.
that's a good point. Why don't you pull up the your market surge again? Because I'm scared that I'm gonna screw this up. It's the most stressful time of my week is sharing on
No.
this program, man. Oh, okay, so looking at the December 18th break,
Mhm.
we had the Fed related one. Everything fell, right? Everything, it got every last thing. Pull up the RSP even on that,
Yeah, that looked so ugly.
right? Like when
So ugly.
RSP falls, like how much was it down?
Oh, it was so bad.
I
3%
3%. That
for
means your
RSP.
average
What?
stock. I mean, you
Yeah.
you buy RSP because you only want to be down 0.5% and you're down 3%. Like that's a big deal. So that was telling you how bad it was. And now, where is the Monday sell-off on the RSP?
It's hard to see. It was up, I think, right?
Yeah.
Yeah.
Up 0.07. So that
Mhm.
was telling you that this was very specific to
Yep.
that space of, the SMH or you can pull up SMH and you can pull up UTES, and they both kind of give you that sense of where was that money flowing. It was flowing out of
Mhm.
there, but it was flowing back into everything
Right.
else. And so
It's
that's
from such a position of strength, you
Well,
know?
it looked beautiful going into, I mean, there's
Yeah.
it looked great. This is just those, they
Yep.
call it the black swan things that just come out of the blue that you're not expecting, but that makes it fascinating. That makes the market fun because it's intellectually stimulating. I've had more thoughts this week on the market than I have in a long time, and it's in a I'm going to do a lot of work tomorrow, and that's what I suggest people do is screen a lot, look for things that had a big
A good
down week
one. Yeah.
to see where the money was flowing out of, and then
Mhm.
also, so don't even uh worry about where it is, what the RS line is, or if it's above the 50 or the 200. Just screen for things that were down 10% or more that are liquid, and look at those and see where they closed for the week. Then do the opposite. Look for stocks that are
Mhm.
above the 50, above the 200 day, that had a high closing range, meaning they closed high within the closing range for the week and they were up.
Yep.
And that's going to tell you where all that money flowed into. And that's where you want to build your watch list. Use the growth 250. That's an excellent thing. I built that currently has 44 different screens that go into that, so it'll pretty much capture
Mhm.
anything that you want. So you got a lot of homework to do.
Yeah.
So have fun. This is not the time to say I had a rough week, I'm just going to relax all weekend. No, go do your walks and stuff like that. But this is a time to do homework.
Yeah. And Webby, I think something that would be fun since you're such a music lover is maybe we end the show every Friday with a song that's sort of like the theme of the week. For me, it would be that song, I get knocked down, but I get up again.
Wow,
Never gonna keep me down.
oh, you know what you didn't. I definitely, Monday was Stormy Monday.
Stormy
There's so many
Monday.
great versions of Stormy.
Yeah.
That's what I would do this weekend is just play through all the Stormy Monday
Versions.
versions, because I mean, gee, I don't even know who did the best one, but you can just play through all of them on Spotify. I
There
have a
you go.
subscription in Spotify. Yeah, so I will start working on that for this week. Um, yeah,
Yeah.
that's
Song of the week,
song of the
the
week.
vibes.
I'm gonna just
What was the
stick
vibe,
with,
you know?
the times they are a changing.
Okay, there we
There you
go.
go. Like, come on, and you haven't seen the Dylan movie. I know you haven't.
I haven't. I haven't. All right.
All
Well,
right,
we've hit the hour mark, but I thought that you would enjoy
I did.
that. See what I do for you? I want you to have
When
fun.
my parents who watch religiously, I've got the best parents in the world, and wishing my mother a speedy recovery on her hand surgery. And really, I'm
Speedy
blessed with the best
recovery.
parents in the world, and
Oh,
they love you more than they love me. They're like, Well,
Oh,
because
hush.
Bradley was seeming a little off, Oh,
Oh,
yeah.
God. I was so off. That was so bad for the 3 people who are still watching,
Okay.
including your I guess 4, your parents and
Yeah.
my parents,
And Izzy, their
who are
dog.
also the best parents in the world.
Izzy
A
watches with
tie.
them.
Aw, so sweet. All right. Thanks, everyone. Thanks, Webby. Hope you have a great weekend. All right, everyone. That's it for today. And we'll see you back on Monday, starting with IBD Live. See you then. Bye, y'all.